Hello, my name's Craig Earlham, Senior Market Analyst at Oanda. Today we're going to talk about the euro versus the pound. Now there's obviously an awful lot going on here, whether we're talking about UK domestic politics, the fact that we're very much in the midst of a leadership contest for the Conservative Party, but ultimately for Prime Minister of the United Kingdom at the most pivotal time in a number of years. We obviously have Brexit still on the horizon. All this has been put on the back burner. And now it's just simply a case of which candidate is going to deliver the harder Brexit or possibly even no-deal Brexit, which is really driving the pound. And as we've seen in the pound very recently, it's all been downhill. It seems a lot of downward pressure on the currency simply because it seems that the candidates, or certain candidates, seem to be wanting to sell the prospect of a harder Brexit or no-deal Brexit more than others, and no more so than the current frontrunner Boris Johnson, who's leading enormously, around a third of the votes in the first ballot, and he's only expanded on that on Tuesday, and he's expected to continue to build on that support. And this is Boris Johnson, who has suggested that we will be leaving on the 31st of October with a deal or without a deal. So that is why we have seen a lot of weakness in the currency, because a lot of people just don't see the possibility to renegotiate a deal with Brussels by the 31st of October. What's interesting, though, is the euro has not been doing too bad as of late, but there is potential that we are seeing a bit of a reversal here. Mario Draghi's comments this week have certainly helped feed into that. The suggestion that there's more room to expand the quantitative easing programme, the very programme which they actually ended at the end of last year, stopping new purchases of European bonds. Of course, they're continuing to roll over previous purchases, but he suggested that could effectively be reopened. But there's also other monetary policy easing measures at their disposable, things like interest rate cuts, even though, again, interest rates are already in negative territory. What that did to the euro is it led to a little bit of softness on the back of these comments. Of course, anyone who's listened to Donald Trump speak recently will very much be aware of this. He was very vocal about his opposition to Draghi's comments on Twitter. Now, what we've seen in this pair as a result is we're starting to potentially see a topping pattern forming. Now, this was already forming prior to Draghi's comments. We have seen a very strong rally in the euro-sterling pair as of late, a combination, like I say, of stabilising of the euro, a little bounce in the single currency, and continuing ongoing weakness in the UK British pound. Now, as we approach that 90 level, we've started to run into resistance, and moreover, prior to these Draghi comments, the divergences were forming with those indicators on the bottom. That's the stochastic and the MACD. They have been forming on the last few peaks that we have seen in price action, so the timing of these Draghi comments could not have been better. We've pulled back towards the 89 level at this moment in time. It's still not clear whether we are going to see another run at that 90. We fell short of it at the first time of asking, so there is a little bit room for a push higher. And as we always say with these divergences, they tend to signal trend weakness, not necessarily an immediate trend reversal. So there's no saying we won't necessarily see a little bit more of an upside here, but if we continue to see these divergences forming, that would continue to suggest trend weakening. And when we're looking at this chart here, we can't deny that this is a market that does look prone for a bit of a correction because of the significance and the span of this actual ascent that we've seen. In the event of a correction, we are seeing support already around 89, but 88 I think is a really interesting level. That's where we see a price support and resistance combined with that 200-day simple moving average, which could present a little bit of a test. Of course, ultimately it doesn't present much of a correction from the overall move here, but it should present an interesting test for this currency pair to the downside.